Good morning, everybody. It's Monday, December 16th, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you've got any questions or comments, please feel free to drop us a line in the chat area, and we'll be sure to get to it during the show. Overnight markets here had March corn up 2 at 444. March soybeans were up 2.5 at 997.5. And March Chicago wheat was up 5 1/4 at 557.5. No export sales announcements here this morning. Hope everybody had a nice weekend. One thing to note, off of Friday, looking at the commitment of traders, funds substantially increased their net long position in corn. So, Dustin, maybe a few thoughts here as we kick off the week, and then we'll throw it around the room.
Good morning. Yes, funds were large buyers of corn. We've noted a little bit on this program, but especially in our letters of where those fund positions have stacked. So they have already, it's basically since mid-October, they've turned long corn. This is the longest they've been all year, though, of course, and it's largely been led by the old crop contracts. So, March through September. The December 25 and beyond, they had been actually building a short position since September, and they started covering a little bit of those, not much. So our net using futures and options purchases for corn was 77,670 going into last week, which we saw a lot of that, that strength in the market as well. We do believe that they're firmly the drivers behind this market. But of that, 72,628 of them were old crop. So big showing maybe of why we're also seeing, ongoing bull spreading anytime we see the funds move. They're actually short the very back end of the market.
Very good. Ben, what's on your mind this morning as we start the week?
Yeah, I was expecting a big increase in fund length in the corn market, and it surprised me how much they had purchased in that time frame. We got right to the 200-day, and we failed. Every day, we're going to kick out the price from 200 days ago and add the current price. And I think we're in a place now where you could start to see over time that 200-day moving lower, and a lot of the volume is concentrated in March. It's just to Justin and Dustin's point, it's where they buy, it's where they participate. It's the most heavily traded contract, and I could see some just kind of a sideways chop here between, call it 48.50 down at 35.37 for a little while. But if you go back to when we made a major turn in the bull market, in time those moving averages worked up to a point where it was not sustainable anymore, and they've kind of moved down to that. It feels like that's a potential outcome here. You look and we go, oh, this is a big number, and it's one of the biggest numbers we've seen in a while for length, but they've been long much more than this. So I think it's going to be up to how aggressive do they want to be in being long corn. And I think that in a year where we didn't have so much uncertainty heading into a change in administration, I think it would be really easy to want to be pretty friendly corn. But I think that there's a lot of risk with, from January 15th till March 15th in these markets. And if something were to come out, or an angry meme tweet or whatever it may be. So I think that there's maybe a consolidation here, and see how committed managed money is to being longer this market. And I don't see a lot of reason outside of something externally to want to push corn back below, call it 420, 425. So probably why we see volatility at a really low, cheap levels. And beans, I think it's worth watching. Jan March is just kind of creeping in every single day. Penny here, penny there, and we're a nickel from it being even. So I think managed money in the short there will be watching that. And I don't know why anyone wants to be short wheat, but that seems to be kind of an ongoing trade lately.
Justin, what's on your mind this morning?
A few things. I'm sure some people saw that farm credit, kind of reaching out to Congress, talking about how bad the lending situation is going to become, we've been talking about on here for a long time. I do think a lot of banks or individual lenders maybe will get caught off guard by how bad some of these losses will actually be for a lot of producers. So Dustin's done a good job of putting out lots of numbers, but this is certainly one of the largest changes, most dramatic changes with costs staying really sticky, near all-time highs, prices plummeting, even with record yields that have some pretty big losses here. And we'll really be heading in. A lot of those aren't, I don't think, recognized fully because you're carrying over old crop, and there's kind of commingling of where revenue's coming in from and how much expenses are. But now that that's settling, I mean, there's going to be some triple-digit per acre losses, even on the rally that we've seen here at today's prices. So seeing that, you're seeing, looking for relief. I know there's a lot of split opinions on that, but that's what's going on. And then I was going to add to Ben's a little bit here. I think, one of the unintended consequences of all these huge biofuels policies is that you're at the mercy of what an administration or a Congress or, the next, politicians in charge decide they want to do with that policy. So I personally believe it's a really good thing to have a huge domestic demand base in biofuels, to compete against South American and something that's going to be hard to compete against on the export market. I think you have, food security. You can always switch policy if there was a really bad drought and redirect that food, but you've built a really big base. So hopefully these things that, these billions of dollars that we've been pumping into the biodiesel industry, for example, now we're waiting on, this 45Z, and the guidance has been, less than horrible on what all that means. So yeah, and then you got a new, Trump coming back in January. So how's that going to play out? So there's just a ton of unknowns, and so much of our market is dependent on ethanol, biofuels, all those kinds of things as well. So that kind of puts us in a tricky spot, in my opinion, on just how some of those things shake out.
Yeah, very good, guys. And Justin, to that point, it's interesting to see that, you've hammered on it a number of times just on this oil market, but Klobuchar and Joni Ernst from Iowa, coming together to write a letter wanting better verification on the used cooking oil piece from China. So you're starting to see some of that come to fruition, that maybe there's some foreshadowing on policy, as we go forward.
Yeah, you sure hope so. I mean, it's really ridiculous the more you look into it, on caps that we put on domestic oil usage, in California, and by the same token allow billions of pounds of China to come in that we subsidize. So it's just really backwards. You would think in a real business, like when you would come out with a big policy like that, you would try to think through those things. And we kind of wait till it's a big problem and then say, oh, that's kind of doesn't make sense. So yeah, there's a lot of things here where I could paint a really, really bullish picture Q1 with some things in the pipeline, or kind of bearish. So that's kind of a really tough spot here. Funds are getting along. There's positives, right? We've run into good export demand. Funds are getting along. You've got good margins. We'll see what the NOPA crush report comes out today, but should be another record for the month with good demand. So we got a lot of positives. I just think there's a couple of walls of worry or speed bumps that we got to be cautious of here.
Well, I think that leads into a little bit of a discussion of if there's going to be payments or not, and how do you handle that. And all I would say, and this is not a recommendation for anyone, is if those payments are sent out and it's something that gives you a pretty decent profitable year, you might start asking yourself a question: what happens if spreads move out and March corn goes back to $4? We've mentioned on here before, sometimes the best trade you can have is getting out of a bad trade. And if that payment materializes and it gets you out of a bad trade, I don't think looking at it as a Band-Aid for prices to go higher is necessarily the answer.
Well, I saw a farm survey this weekend, and farm surveys are farm surveys. We know what these are, but it was actually over 50% of respondents were not in favor of the Farm Act direct payments. in our industry, which I found a little bit surprising. I mean, maybe it's just me, but so it'll be interesting to see what they do. I know that, American Soybean Association and, as you referenced, Farm Credit, both of those folks came out this weekend pretty harshly criticizing Congress for not doing something here.
Yeah, I mean, they're worried about their bottom line. Let's be
Sure.
honest. I mean, they know it's going to start affecting them, some bad loans. And, I will say that, even though my family farms, I mean, just throwing money at the problem is not fixing it. It's not fixing bad behavior. It's not fixing some of the things that need to ultimately fix to cure, to cure low prices and to cure negative margins. You have to make adjustments. You can't be paying $600 an acre for rent and starting at a $200 or $300 loss, hoping that things get better. That's just the reality of where we are right now. So I don't know the right answer, but we've got to find a way. That's why I'm in such big favor of a big domestic demand policy, to use it here instead of doing all these inefficient things. I think there's a lot of inefficient things that we're doing where we're still throwing money at the problem, but we're throwing money at China and we're throwing money at players that aren't helping the overall good of what we're trying to do here. So I think hopefully there's some just super inefficient things that we can cut out and streamline versus just throwing cash at people, because I don't think that fixes it.
Yeah, I think that's that's a good point. As we come into the lame duck session, I mean, there's going to be a lot of discussion on this, so we'll keep everybody up to speed. Rylan, quickly before we come into the open here, I noticed news out of Mexico. They're going to halt imports now. They'll resume after the first of the year and kind of incrementally increase beyond that. I know there was talks that maybe they were going to start allowing a little bit of export here, but it looks like it's going to be after the new year. And then real strong finish last week in the hog complex. So what are your thoughts as we start the week?
Yeah, so I mean, exactly that. I think the market was kind of anticipating eventually the border to reopen, but time frame was definitely the issue. But then on the other hand, we've got the potential tariff discussions, down the road after the inauguration and see what happens there. So, I mean, I think you can get kind of a two-sided argument from both cases, in which is going to be more impactful. But obviously, the near term kind of proved itself. So I think that's kind of a risk just right now, that we can see that coming down the pipeline. But overall, the cash market has been really good. It's been really hot this week. I think it did catch quite a few people off guard too, just judging by how quickly this market kind of took off. So we saw cash up 3 to 6 in live, up 5 to 8 in dressed. So overall, it's a really strong market. It's hard to fight. There's another big increase in open interest, about 3,200 contracts. So it still feels like the managed money probably is still kind of riding this crest. There's still net long 126,000 contracts after buying, nearly 4,000 the previous week. Beef market's back up. So it just feels like if this trajectory is going to continue, I mean, there's really just kind of no no end in sight yet. But you are getting these levels where it's like, okay, how much higher are they really going to push this thing, or is this just a big move to grab inventory before the end of the year, before the holiday? So we'll see if it continues. On the hog side, same kind of thing. We bounce back. Open interest, interestingly, starting to kind of, or at least commitment on the managed money side, starting to ease back a little bit. We are seeing a bit of liquidation here. Seems like the big jump in bellies probably got us worked up after kind of weakening up the most of the week. So overall, it just feels like the tide may be turning a little bit. February is right at the 50-day moving average. So I think you start trading below those levels, you can get some acceleration. So I think that's one thing to look out, just especially ahead of the hog and pig report, coming out this week.
When is that, Rylan? Is that Friday?
What is it?
I think it's Friday at 2.
I want to say it's Friday. Stay with me. That would
be a curveball.
Sorry, love those curveballs. I don't think I'm even looking at the right calendar now.
Yeah, it's Friday at 2.
It's Friday at 2.
Just stalling you into the open here is all. It
sounds good.
Good hosting.
Actually, no, sorry, it's Monday the 23rd.
Oh, we weren't even close.
There you go. Sorry, not this week, Monday. So we'll be trading it this week, I think, for the most part.
Oh, perfect. All right. Thanks, Ry, for the update.
Yep.
We just came into the open here. We got March corn up a couple. 444 is the last. March soybeans are up 2.5, 997 1/4. And March Chicago wheat is up 3 3/4 at 556. Appreciate everybody that tunes in on a daily basis. Go ahead and throw us a like or subscribe. It'll certainly keep you up to speed on everything AgYield as we do special webinars throughout the year on different topics. So, like I said, appreciate everybody that supports the show. Throw us a like or subscribe. And every day that the markets are open, we're streaming live on X, Facebook Live, and YouTube Live at 8:15 Central Time. Appreciate the thoughts and comments this morning, guys. It was a good show. Hope everybody has a good start to the week, and we'll talk to you again tomorrow.
The War Room is proudly presented by AgYield. For over 50 years, the AgYield team has provided grain marketing and risk management solutions for growers across the country. Our veteran consultants harness cutting-edge technologies to pinpoint risk, optimize market performance, and protect your farm's profitability. Discover a new approach to farm revenue management at agyield.com.
Hey guys, Jack here. Be sure to support the show by hitting the like button, leaving us a comment, and subscribing to the channel for all the latest updates. Thanks for watching. We'll see you next time.